Election debates often grab headlines, drawing viewers in with grandiose promises and heated exchanges. Yet these spectacles rarely provide a clear picture of the future, whether it's policy or the economic realities. In this landscape of political rhetoric, it's actually essential to pivot away from that and focus on the true predictors of the economy and the performance, bond yields. And that's what we want to be talking about today. As we kick off, I want to start with economic and stock market risks. Now, over the past few months, bond prices have been really moving upward, and this has been something that's new. 2 years ago, this has not been the case. So what this is doing is now signaling a shift of the market dynamics, the promises for the future, things like that. And notably, for the first time in 27 months, the yield curve has uninverted and actually normalized. Now, this is actually a very good shift, and it's really influenced by the 2-year yield in bond that's actually coming down. Now, this is really because of the anticipated interest rate cuts that are going to be happening this week. So, if we get a modest cut, which is one cut, and each cut is a 0.25% move. So call it 1/4%, or what we call 25 basis points. Now, this really could pave the way for additional rates cutting in the future, and we're actually anticipating maybe 3 to 5 of these 1/4% cuts over the next, say, 6 months. Now, this would actually be viewed as normal and what is expected. And if we get those really normalcy behind it, I think things can actually do pretty well. However, should the Federal Reserve actually be more aggressive than that, and they cut rates faster than what we had anticipated, what that's actually going to signal is that the economy is deteriorating at a faster pace than what we expected. So the uninverting of the yield curve is actually something that we can watch pretty closely. And under normal circumstances, it would actually say that a recession is coming. Well, right now, if we see more than those 3 to 5 rate cuts, and we really start to see that we're getting 50 basis points or 2 of those 1/4% rate cuts at a time, well, then we could really start to see the stock market be, well, a little jittery, and for good regard, because we are really, in fact, in a bad spot with our economy. But then, obviously, conversely, if we are just in line with our expectation, or we don't get as many rate cuts, I actually think the opposite. Stocks may do well, but bonds may actually start to get hurt and start having a sell-off because of that. So there's a lot of dynamics out there. But that is what we look at when we talk about the future of the economy and recessions and all those different details. It comes back down to the yield curve. So with that, let's actually change our focus now. Let's talk about portfolio changes. And in light of all of the elements I'm talking about, all the different developments with the yield curve or the debates or anything of that manner, it really doesn't necessarily matter unless we're taking a look at what strategies work in the environment we're in. And right now, bonds have been one of the best places to be invested into. And so when we take a look at all the different ways that bonds are growing, the different ways that the interest rates are coming down, that's working very well. Well, others that work in this environment that we've added into the portfolios include utilities, consumer staples, healthcare, and even newer investments that really do well when we have interest rate cuts going like this, real estate. So there's a lot here. And when we backtest all of this, those are the areas that work the best under these types of conditions. And so yes, we have lowered the technology in your portfolios. We have lowered some of the growth stocks. But that's not always going to be the case. If our economy continues to chug along, we need to add those back in because those will actually be one of the best places to be invested. So as we take a look at things, yes, it may not be clear over the next number of weeks, but we're really going to get a sense of the future of our economy. And if we look at the yield, the yield rates and the interest rates that are there, and we don't actually look at the politics behind things, we can actually really figure out where we're going with the economy. So that's really something to really know and trust. Now, let's change our focus to wealth management and advanced planning. So what I actually want to talk about here is in lines with everything else that we're looking at as well, and all the complexities of the investments and things. But when we take a look at the environment we're in, there are some stocks that are going to do well, and some investments that are going to do well, and some that aren't. Now, right now, tax loss harvesting can actually be a very pivotal strategy. So we don't have to wait until year end in order to do this. And what we are looking to do is in a taxable account that you have some capital gains, you have income, things that are subject to tax. Well, if we actually take a tax loss harvest of the ones that may actually have a loss right now because of changes of the environment, we can actually really work on your broader tax implications and mitigation strategies. That's what the power of this is. And when we take a look at all the different ways we implement them, all the different ways that we are working with tax loss harvesting, obviously it comes back to you. It comes back to what you're trying to do, your goals for the future, and risk management, all of those things. But there's also some key things that you need to be looking at every time we look at the tax and the looking to harvest the losses as well. So the first one, the risk of foregoing quick profits. Now what this is saying that if you sell today, it may turn around quickly and you would not have those gains as part of your portfolio. So being strategic about when we take those losses actually is pretty helpful too. Finding a suitable replacement for the sold asset is the next step. So if it's in the same type of vehicle, well, that could be subject to a wash sale. So if we're exchanging a like for a like, so that's if it very, very similar type of assets, we may actually have a wash sale that comes out. We don't want that. So we need to make sure we know what we're going into, and then really managing the future tax implications as well. So that's the other key element here that we can be working with. Now, yes, there are other things that we need to be thinking about, especially fees. If we're going to do this correctly, this actually may be costly if there are a lot of fees in order to buy and sell and transact in those accounts. So knowing that, actually, we need to take that into account when we do tax loss harvesting. But then when we look at all of the different ways that we can have the concentration of investments and then the risk that is associated with them, and trying to avoid that a little bit by selling correctly, taking those losses, investing into something that is going to avoid a wash sale, will actually be a strategy that is a way forward that could help to maximize the benefits of growing the accounts while minimizing taxes. So there's a lot there, and I'm excited for it, but it needs to be done correctly. So, when we take a look at all that, tax loss harvesting, when we take a look at the ways in which the economy is running right now and different types of investments, I want to talk about our second opinion service. And as you, or a colleague of yours, or even a family member, is really feeling uncertain with some of the ways that they're working with their wealth plan, just know that we can work with them and bring them through our second opinion service that takes a look at where they're at today, where they want to go in the future, and then see if there's any gaps that exist. And we can help alleviate any of those concerns. Now, If you actually want to go through this, or someone that you know wants to be going through a second opinion of what they're doing, click the link below and we'd be happy to set up a time to meet and talk through the discovery meeting and the ideals behind that and what we are really wanting to accomplish out of those meetings to better the goals that we have for the future.